Good evening, traders and investors. It's Thursday, October 23rd. Another day strong for stocks. We saw more or less the small caps, the IWM, move up the most, 1.25%. NASDAQ wasn't far behind, up almost 1%. So we're kind of seeing a broad market rally still. After the Trump news that we saw the big down day in the market that shocked the market, killed the upward momentum, and the market has been clawing its way back, trying to stabilize to see if it's going to go higher or not. The market has been kind of just ping-ponging around between, if we look at our 30-minute chart here, from panic selling waves where the market puts in a short-term low to a FOMO wave where it puts in a high and then kind of sloshes back and forth. We don't have any extreme readings over the past couple of sessions, just kind of drifting in no man's land here in terms of sentiment of either panic selling or panic buying, meaning that people are worried they're going to miss out if they just don't buy at the current price. And when we take a look at the VIX, we can see the VIX down about 7% today, telling us fear is dissipating. People aren't too worried. And if we look at the put-call ratio, down a little bit, it's kind of in no man's land. There's no real significant level at 69. We really want to get, it's hard to see, but we want to get this light blue line, this 5-day moving average. We want to get it below the 20 and the 50-day. That's usually a good scenario when it crosses below. It usually means the market is strengthening up. But we do have some trade signals. We've got 3 sector trades we're moving into tomorrow and a couple of other trades as well. So it's kind of exciting to see how all of this shakes out. And just a quick reminder, guys, if you like these videos, if you like the insight and what I share, be sure to subscribe. It's a free way to show support for the channel. I know if you like topics, if you like what I'm doing, and of course, put in your comments. I do try to reply to almost every comment, or at least give it the thumbs up and like. And I do read them, so that's where I get a lot of insight on things to touch on and cover. And if you are interested, obviously, in copying the same trades I take with my portfolio, that's what I do with the Asset Revesting newsletter. You can come to this page and you can learn all about all kinds of stuff. Like the number one biggest lie is to diversify, and how bonds are not a safe investment, which most of you, if you're still holding them for the last few years, you'll realize that. And of course, how speaking with an investment broker or advisor before placing a trade may not be the best thing for you, because they do what all the other ones do, which is buy and hold, ride things out, get into things late, and just say, hold on, you'll be fine. And I don't believe in that. I believe in only holding assets going up. And when we do that, we end up having this upward trajectory. Doesn't matter if we go through the 2008 financial crisis, we go through a May flash crash in 2010, we have COVID, we have the 2022 bear market. It doesn't matter. We only rotate into things that are proving strength and moving higher. And we can also benefit during falling markets, bear markets, with inverse ETFs or moving to a different asset class. It could be bonds, it could be currency, it could be an inverse ETF. So anyways, make sure you subscribe to my channel if you like what I'm doing. We really appreciate it. If we take a look at the dollar, we can see the dollar here is still trying to form and carve out this bottom. It is building what looks to be a launch pad or a bull flag pattern here, meaning it's had a very nice move up, pull back, it's hit 100% move, and now it is kind of consolidating. Might put in a bull flag pattern here or a pennant formation, and then we might see it eventually go up and have another push to some higher levels. But we just have to let that kind of mature and unfold. Now, if we take a look at the chart of bonds, we're talking about quarter rate hike. We're seeing bonds move up, I think, anticipation of rates continuing to go down. And today we saw bonds move down a little bit. Money was flowing out of bonds and into equities. We did see gold have a nice bounce. We saw gold, silver, and miners all have a pretty nice bounce today. Yesterday we talked about the big move down and the gap lower in the mining space and how that kind of recovered. And now we're just trying to see if gold and silver and miners are going to stabilize. Now, generally with a solid asset, well, pardon the pun, but a index or gold, something like this, that is pretty highly followed. When you have a strong trend that goes for a long time and you have a very sharp pullback to a key moving average, the 20-day, the 50, and the 50-day are very key moving averages. If you get a sharp pull into that 20-day, usually it's going to want to bounce right after that. It's just kind of a technical trade. And that's kind of what we've got at this point. So we're going to see if we can stabilize more, and if we're going to see gold continue to want to recover and push higher. I do think there's still quite a bit of room to the upside. Based on the video I shared earlier, comparing the 1970s gold rally, based on that is showing gold actually, if it was to copy that, would be 100% upside move from where gold is right now, putting it up at like 8,000. I don't think that is quite going to happen this time around, but I do think we could see this recover very quickly. This is just the first real pullback during this high volatility kind of bubble phase, and I do think it can snap back and take off to the upside going forward. If we take a look at silver, again, it's kind of had its stair-stepping down. It's trading into support. And of course, if we can look at silver miners, but they're all pretty much the same. They've all just had a big drop, lots of panic selling. And this could be like an exhaustion island pattern, meaning it gaps down, creates this bridge, this open water area. It's an exhaustion move of fear. It recovers, and then suddenly we can see this market recover and go forward. Usually we tend to see gaps get filled, and these type of patterns usually are a sign of maximum emotions, and it's just caused the markets to have a huge gap. And usually those emotional moves are taken back very quickly. I think the big mover today that really kind of got everybody's attention was the 5% pop in crude oil. Now, this is a news-driven move, kind of like the tariff move that caused the big one-day drop in equities a couple weeks ago. This is a kind of similar type of news-driven move, creating a very strong pop. Now, we didn't see the XLE, the energy sector stocks, perform really well. They did move up. Percentage-wise, though, it was only 1.3%. The big movers that moved with oil today were the oil holders, the oil services. They moved up 5% plus, just like oil, really showing some pretty big leadership. Now, when we zoom back on the chart, you can see they definitely have been out of favor for a long time. I believe we're going to see oil break down and head down into the 40s at some point. And just based on these stocks, that is also telling us investors have been thinking and seeing that for a long time as well. Hence, they've been moving away from these stocks because they think they're going to go down. Now, it's definitely hit a major support level. We got a very strong bounce, and we've got this kind of parabolic move with news. I would tend to think, again, this is just the first day in. We'll have to see how tomorrow follows through, or if there is any follow through. But these straight up moves and news, especially when you're in a long-term downtrend, can get sold into very quickly. So I don't trust this. I do think as long as something doesn't trump it in terms of some wild card that continues to juice the price of oil and probably oil holders at the same time, I do think eventually they're going to resolve to the downside and probably break down in a pretty big way. But you can just see these have just been moving down for a long time, not the best track record here. If we take a look at the MAGS 7, the MAGS ETF, it's been consolidating, chopping here, trying to figure out what it is going to do. The long-term 150-day moving average is sloping up. That is bullish. Obviously, the 50 and the 20-day are also sloping up and bullish. It is still in an uptrend. It is just taking a consolidation. It's trying to figure out, is it putting in a top or is it consolidating before pushing higher? So we kind of saw something this was a little bit more of a running correction. This one more so kind of slowly channeled its way up, kind of having this running correction where it runs up and then it pulls back and tries to shake the market out, runs up to a nominal small little new high, pulls back, tries to shake people out. These running corrections act just like one of these, just they're harder to gauge because they carry more volatility and you don't really know which way they're going to break, but it does strengthen the market. And then usually whatever this first move was, usually you'll see that second move come afterwards. It's just much harder to gauge than a simple bull flag or pennant formation or something like that to get an upside target. But it does look like it is on the verge of popping and trying to break out to the upside going forward. So last but not least, when we take a look at Bitcoin, it's been struggling. I covered it in the morning video. It doesn't look very healthy. It's trying to figure out what it wants to do. I'm not a big fan of this chart. Again, it's got a broadening formation, which means it's just getting more volatile, carrying more and more risk as it works its way through this pattern. We really saw Bitcoin fall out of favor a while ago. And when we take a look at like Ethereum, if we take a look at the volume on Ethereum, it's just completely rocketed and shot higher. It became, everybody moved. I don't know which influencer or which big hedge fund head came out and started talking about Ethereum. I'm pretty sure there was a few people that jumped on that bandwagon, created all the feeding frenzy. And of course, you can see it in the shares, you can see it in the share price, and that's been moving up. Now, it does have a much better looking chart to some regard than Bitcoin. It does have kind of this run up, and it has, it's at least making a series of lower highs and lower lows. So it's channeling down, which can be seen as a bull flag. But it's still pretty noisy. It still did break a high right here and then reversed down, and it also broke this low over here and shot higher. So it's still carrying very similar characteristics and moves as Bitcoin itself. I'm not a fan of them, and I think there's potential the way this pattern is unfolding. It feels kind of like over here where it could want to just kind of fall out of bed, and more or less all of these people here who kind of more so get in up here. The market loves to run out people who, all purchase on news and a feeding frenzy of momentum. And usually when that momentum stalls out, the market loves to try and shake them out and spook them out. And then it may want to go higher. But again, I would steer clear of the crypto space for now, just because they're pretty ugly charts. And I think they carry a lot of volatility. If we take a look at the list of sectors from best performing down to the worst today, obviously the top performing were the oil holders and XOP, which is more so exploration, energy stocks, oil stocks. The worst performing ended up being IYT, which is the transportation sector. And I have a feeling that has to do with high oil pricing. If fuel is going to cost more, people might not ship as much. People might not, we might see things slow down. So not a whole lot of insight when we look at the long-term chart of the transportation space. It's a pretty noisy chart. It's been kind of up into this nosebleed territory, and it does not like high oil pricing. Simply that's you can see that in the share price today. Investors just selling off a little bit, saying, "Hey, energy is really high. It's going to cost a lot to ship stuff going forward." Anyway, that is it for now. We'll talk to you soon, and take care. Bye-bye.